Hello, Trade Pros. This is Victoria from Trade Pro Academy, and we've got another great YouTube video for you today. And in today's YouTube video, as you may have guessed by the title, we're going to be explaining the SPY day trading strategy, a SPY options day trading strategy. And in front of me, you can see we do have the SPY. So in this video, I'm going to show you a strategy that I like to use. I'm going to explain everything in the chart right here. I believe if you guys have seen previous videos, you'll already know what is up. And before we get started, I want you guys to smash that subscribe button, smash that like button, and ring that little bell to notify you when we do go live and when we do drop videos like these on the weekends. So I hope everyone is ready. Let's get ready for the intro and jump right into this video. So before we jump into this video, I'm going to give you guys a few little things that I like to use when trading and a few things that you may need. So number one, let's go over the things that I think you would need to trade this strategy and just the SPY in general. A chart, whether it's on your favorite platform or whether it's on TradingView. I do like the TradingView charts. I like to do multi-time frame analysis on an hourly, 10-minute, and a 5-minute, and a 2-minute chart. Not all the time, not for every trade, but mainly a 5 and a 2-minute or a 3-minute chart. That's what you'll need for sure. You will need an options chain, right? This is my interactive brokers options chain. You can see it's on Tesla right now, but we'll change it to the SPY. And what I do like as well is an options chart. So an options chart of the actual option. So this would be the SPY on a 1-day expiry, and it tells you what the options price is. So we're going to go through all of those and we're going to break it down. So this trading strategy on the SPY is a mainly pullback strategy. And another thing that I like to use that you may not have to have per se is an order flow options tool such as Algo or Cheddar Flow. So let's go through that and let's go through what to do and how to trade this strategy. So when trading the SPY is the overall market pretty much. I like to watch the S&P 500 futures pre-market and overnight to give me more of an indication of what the SPY may do. Now, to trade the SPY, I typically start on a 1-hour chart and identify where some key support resistance levels are. Now, on this chart, you may notice we have some EMAs. The 20 EMA is going to be my friend, and also on clouds, in terms of cloud EMAs, I have a 512 and a 3450. So on a 1 hour, ideally, we're on above the 3450 EMA and above the 20 for the upside swing. But mainly what I do on the 1 hour is I draw my levels, areas of support resistance, to see if we can break those areas and we can pull back, or if we can catch the breakout on those trades. Then this is a little more important than the 1 hour. I find the 10-minute, where I zero in and draw those key levels again. What I like to do is mark my pre-market tops and lows, and from there identify maybe breakouts of the pre-market tops. As you can see, this spike in volume right here was the 9:30 open, and the pre-market top is right here. So if we start breaking above this pre-market top and maybe close above it, I'm going to be starting to look for longs, and then the same thing to the downside for shorts. Now on the 10-minute chart, what's important to know here on this strategy is, are we above the 512 EMA, right? Are we above the 20-day EMA, and are we above the 3450 EMA? On a 10-minute chart, the key is we should be above the 3450 EMA for us to consider the upside. If we're below, we consider the downside, right? And we don't really necessarily look at the shift, either upside or downside, until we look at the 5-minute chart, which is next. The 5-minute chart, again, same rules apply. Are we above the 20 and the 3450? As long as we're above those two, the 512 could shift around a little, but as long as we're above those two, I'm considering the longs. When we break under the 3450 and the 20, then I am looking for shorts. So in this case, it would be right here after the break of that 3450. So I like to use in this strategy EMAs and market structure. So market structure, where are the prior tops? Where are the support structures, right? So this prior top, we were looking for breakouts, because if we break out this prior top, it's going to run for a nice buy stop run through all-time highs. So that was the thought process of both the EMAs and the structural component. So how do we play with this strategy? So the strategy is pretty simple. I like to look for pullbacks into the 20-day EMA on a 5-minute chart. It's as simple as that. It's as simple as that. So when price pulls back into that 20 EMA, right, we have a last line of support at the 34.50. I want to see a green candle on a 2-minute chart so I can look to get long. Because when you go to a 2-minute chart, the EMA's changed, so I don't really consider it that much. So we get this big green candle, and I'm getting long right around that area after this green candle is formed on a 2-minute chart. So if we go back to the 5-minute, I'm getting long somewhere towards the tops of that 5-minute chart to get that rally to the upside. And what I mean by long is I'm going to start buying calls, right? So when I start buying calls, ideally, there's 2 criteria. We're in a support structure zone from a prior top, and we're in this 20 EMA. Last line of defense, 34.50, with the stops below that 34.50 or the prior extended red candle right here. And then we get long, and ideally something like this happens, and we can trail every time a 5-minute green candle closes. I like to trail below those guys. Now, what I like to do is buy calls. Now on SPY, if we dive a little deeper into this, SPY has 3 expirations on the call side, the Monday, Wednesday, and Friday. So I would typically like to buy not the same day expiry, but one day out or the next one after that. So it's Thursday, and I would be buying the March 12th, which is tomorrow's expiry. I don't mind those ones. They have to make a move a little faster, or I'm going to go to the March 15th, right? The rule of thumb here is if I'm buying March 12th, I'm probably not going past 2 out the money. I want to have a delta of at least 30 on this trade for an actual potential good profit move. If I am going March 15th, which is now 4 days, right, on the Monday, I can go a little further because you can see the 30 delta is at 3 out the money. So it's very important to consider these, because if I'm day trading this strategy, it's going to be on short-term options. Now, to the downside, when we break the 5-minute 20 EMA, it's not enough to break it here and say, okay, let's get short, we're done with this long side, because you get stopped out like this. You need to break, in my strategy, the 34.50 as well as the 20. So when we break it down here, then I get comfortable with maybe looking for pullbacks into that 20, which is right about here, right? You can use a 512 as well for the pullback area if it's an aggressive trend, like here, for example. But ideally, the closer you get to the 20, that's going to be a good area. Remember, 2-minute red candle in that area. So in this area, it'd be somewhere here or here based on the 5-minute. You could even wait for the 5-minute green candle, especially if it's a nice doji like this, and look for puts. Again, if I'm getting long puts for the short side, I'm going OTM slightly if I'm doing the 1 day, right? Where is the 30 delta, right? It happens to be 3 out the money here, but I want to stick to 1 or 2 out the money if it's that close of an expiry. And if I go to 4 days, I can go all the way to 3 or 4 out the money. And then when I get long either the puts or calls, I like to refer to my options chart right here, my options pricing chart. So I know where are my stops on this day trade, right? If I'm buying puts or calls, this is a call chart. If I'm buying calls, I want to see it in an upward structure, because the structure does mimic the general movement of the SPY. So if I'm looking for an upward structure, I know where my stops should be, even based on the actual options chart, not just the underlying chart of the SPY. But I also look at volume. You have to look at volume, which is very important. When you're coming into these areas, is volume spiking on the bull side, right? Is volume spiking on the sell side, right? And you're looking at your 2-minute charts to confirm if that volume is there. So in this case right here, if we're getting long down here in this area, because this happened to be this support right here, I know that I'm going to be paying around $1 for this option, and I know that my stop should be down here. I'm risking under $20 per contract if I have my stop under here, because that would effectively break the trend, right? A lower low in the uptrend breaks the trend. So I can only risk $20 per contract, right? You slap on 10 contracts and look at the potential move here. This potential move goes all the way up to $2.40 or 246 bucks, right? And you're risking $20 per contract. So if you want to learn more about this strategy, come check us out at TRADEPRO Academy. I do this every day in the live options trading room, and I want to see you guys there. But with a little extra piece here, how I use flow algo is when I see call or put sweeps coming in on the SPY. These are confirmation tools, kind of like volume. If I type in SPY here for all the results, you can see in the past bit, mainly what I've seen is just puts, but I want to keep in mind, I want to only look for sweeps. Remember, if you guys are interested in knowing what I'm talking about, go to our flow algo intro video and you'll find everything there. But sweeps generally mean, this is multiple exchange sweeps, meaning that whoever buys these calls or puts wants to get their orders and wants to get everything super aggressively. It doesn't matter which exchange. And these are pretty much like aggressive market orders. That's what I look at. So when we come into areas of interest, right, whether it's down here for the longs or up here for the shorts, I want to confirm with my flow algo that we have big puts or big calls coming in at a short-term strike at the time at the level that I'm looking at, right? So 1103, some big puts came in on the sweep side, right? And just before that, 1056. So if I go here and I see where 1056, 1103 was. So 1056, big puts came in here. 1103, puts keep coming in. Is that going to make me short this? No, because I'm looking at the trend and I'm looking that it's going up and it's strong to the upside. So that means for me, it doesn't matter that these puts are coming in so aggressively because this is my confirmation tool that I want to see for my structural components. So take it with a grain of salt. That's why I didn't dive too much into this. It's more of an advanced technique. But if you want to see us read it every day in the room, come check us out. And this was the video for my SPY options trading strategy. I hope you guys enjoyed it. Drop some comments down below. How do you guys trade the SPY? How do you guys compare the SPY to the ES, to the futures market? Let us know which one you like, and I want you guys to smash that subscribe button, smash that like button, ring that little bell, notify you when we do go live, when we drop videos like these, and also we'll see everyone next time.